Okay, guys, it's a little after 1 a.m. in the morning, Eastern Standard Time, and we kind of have to have a discussion here because this is going to be a good segue for where we go next on this channel. And spoiler alert, if you want to know where we go next, what I'm going to be doing in 2023 is I'm going to give you my advice on how to diversify and or invest in the overall antiques and collectibles trade. That's pretty much where we're going, that direction on this particular channel at present time. And this is more of an advanced talking point. That's why, if you guys wonder why I didn't do this early on, I had to do a lot of videos that were devoted to the fundamentals, the basics of investing in antiques and collectibles, and how there are similarities and also a little bit of differences between investing in traditional financial assets versus that of speculative assets of antiques and collectibles. And that's really what I spent the core crux of this time developing this channel talking about, because that's what seems to be missing on YouTube. That's what seems to be missing among the Timmies, Kimmies, and Poindexters that flock to collecting forums or Facebook groups. And they want to invest in Pokemon or comic books or whatever it is, whatever their favorite collecting category is. This is what you need to know. This is what you got to understand. It all comes down to this. Your favorite investment vehicle or collecting category does not exist in a vacuum amongst itself. And what I mean by that is almost all of these markets, whether we're talking about antiques, collectibles, cryptocurrency, precious metals, all of these markets operate on the same core fundamentals of that as financial assets. Wall Street, stocks, bonds, mutual funds, ETFs, corporate bonds, whatever you're investing in, these markets share a lot of similarities at the core level, meaning a lot of the terms, a lot of the tricks that a lot of the investors, market manipulators, speculators use who are really advanced, they understand that relationship perfectly. How if you want to make a collecting category pop, there are certain tricks that you can use that if you did it on Wall Street, you would probably be fined, if not put in jail, by the SEC. If you do it in the antiques and collectibles trade, guess what? It's not governed by any regulatory body. It's an unregulated market for that reason. Now, this is both good and bad, because if you understand this, if you learn it, you can then start to realize that, oh, if something happens in the overall macroeconomic system, meaning if interest rates start to rise, if we hit a recession, well, it's obviously not only going to affect my stocks, bonds, mutual funds, ETFs, and potentially real estate. It also could affect the antiques and collectibles that I invest in, or these markets that I choose to diversify in. And this is something that, unfortunately, is not talked often about on YouTube, on Facebook groups, and even in collecting forums. Let me use this as an example. Let's suppose that you have $10,000 sitting in a money market account right now. And it's just money that you don't need. It's not invested in the stock market. It's not money that you're going to need for any expense. It is just extra savings that you have saved up. And you're potentially thinking about going after a vintage CGC graded comic book, one that's selling for roughly $10,000. Well, here's the thing. If you're an investor and you understand all of these financial basics, all of these fundamentals that I teach on this channel, you're going to be sitting there going, well, gee, I have $10,000 in this money market account and rates are steadily increasing. Literally 2 years ago, I was getting shit on this money. Now, all of a sudden, I'm getting 5%. So if I just hold that $10,000 there and rates don't increase, rates literally just stay the same. 1 year from now, just by doing nothing, I don't have to take a risk, I'm going to now have $10,500 in that investment account, in that money market fund, okay? Now, we know, due to what the Fed's doing right now, rates most likely aren't going to stay the same. Rates are most likely still going to increase, maybe not as much in 2022 like they did, but in 2023, rates are potentially still going to increase across the board. So it could be I leave that $10,000 in that money market account. 1 year from now, all things being equal, I get $10,600. I get a $600 return on my money just by doing nothing. Well, now, if I'm an investor and I'm able to emotionally unattach from my feelings toward this $10,000 comic book I want to buy, I may go to the market and I may go, well, gee, is it really worth giving up $600 a year just by doing nothing to buy a $10,000 comic book? I'm going to really have to find a good deal to be willing to spend that $10,000 in that macroeconomic environment and part with it to get that comic book now. I'm not going to be like the Timmys, Kimmys, and Poindexters that buy that book at all costs and then create a story in their mind telling themselves how it's going to be a great investment going forward. Because I live in the world of logic. I understand facts, figures. I understand that that $10,000 with no risk at all can just sit in a money market account and it can generate 5 to 6% for me. So now I got news for you. There's other people that spend that amount of money on comic books that think the same way. And maybe they also collect rare coins. Maybe they collect sports cards. Maybe, hell, they even possibly collect vintage toys, Pokemon cards, Magic the Gathering. So now what's going to happen is a lot of people are going to look at that and they're going to go, you know, I can hold off on this comic book right now. I'm not going to give up the earning potential of 5 to 6% per year with no risk just to buy a comic book that's going to sit in my safety deposit box and pay me nothing. It's just going to take up space, and I'm going to sit there and hope that it goes up in value. Now, obviously, if you're educated in business and economics, one of the things that's going to hit your mind is it going to go up in value in this market? Because it seems to me, if somebody's truly investing in this market and they can get 5 to 6% doing nothing, why would they put the money in the comic book? The comic book would have to sell at a discounted rate for me to want to part with this particular environment that we're in, where I'm getting 5 to 6% on this money. So now what I'm going to do is I'm going to go and I'm going to look up either Go Collect or GPA, and I'm going to see what was the highest point that comic book that I have my eye on for $10,000 ever sold for. What was the lowest point? When was the highest point hit? Was it during the pandemic? Was it when we were coming out of the pandemic? Was it just a few weeks back? Because that says something. Maybe demand is increasing for that book. And also, when did it hit the low point? Did it start to pretty much fall? Was it once a $12,000 book? Now it's a $10,000 book. Was it once a $15,000 book? Now it's down to $10,000. What was the low point? Or did it once sell for $6,000, $7,000, $8,000? I need to keep all that in my mind. Now, what I'm going to do is, I want this book for $10,000. How many are out there? And realistically, how many copies of this book in the grade that I want, the grade that I value at investment grade level or above? Remember, I'm an investor, so I'm most likely probably not, if I'm paying $10,000 for this book, assuming it is a late silver or a Bronze Age key, we'll just use that as an example, I'm probably not going to be going after this book in 8.0 condition or even 9.0 condition. This is probably going to be a 9.2, 9.4, 9.6 graded copy on average that I'm going after, okay? So I'm looking at how many copies are out there, how many copies have come to market over the last few years, what they sold for, and also I want to get a pulse of the market. So for instance, if this CGC graded comic book that I'm going after, and if you notice, guys, in the filming of this video, I'm not naming a particular book. I'm doing that on purpose. That's purposely being omitted because this could apply to any book that you're thinking of buying. That's really what I want to put in your head. But this book, is there a movie that's coming out that's going to feature this character? How popular is the character in this book that's selling for $10,000 right now? Is it in a speculative frenzy? For instance, am I going after a Tomb of Dracula 10 right now? Tomb of Dracula 10 is not a good book to buy right now because obviously the Blade movie is coming. There's a lot of hype surrounding that. Just like during the Disney release of Werewolf by Night. Bad time to buy Werewolf by Night 32, as some of you have discovered, because that book dropped a lot since that particular miniseries show on Disney Plus came out. So with that being said, you have to analyze the activities of the overall market. You got to keep that in mind. So let's say, now let me use a scenario here. Let's say that this book that normally sells for $10,000, I see it on Heritage or I see it on Comic Link, and I see that the bid only has an hour to go and it's only at $7,000. Now, I was prepared under normal macroeconomic conditions. I was prepared to pay $10,000 for this book, all things being equal. The thing that's holding me back is the fact that I'm getting 5 to 6% on my money doing absolutely nothing. So now I'm watching this bid, and the bid jumps up $7,800. Somebody puts in a bid, it's now $8,200. Is it worth me giving up the $10,000 I have sitting that's getting 5 to 6% to buy this book if I can get it for $1,600 or $1,800 less than $10,000? Is it worth that? Because we also have to work backwards here. That $10,000, assuming rates stay the same, and I'm just going to use a rate of 6%. Let's assume that I can get 6% on that money. What are the chances that those interest rates are going to hold at 5 or 6% over the next 2 or 3 years? Do you see where I'm getting that? Because that equals then the amount of discount that now I'm able to pretty much get for that book on an auction site. This is the way investors think. This is why Timmy's, Kimmy's, and Poindexters cannot compete with investors. Like, I remember when I first started this channel, true story, I would tell people that I invest in rare coins. And there would be Timmy's, Kimmy's, and Poindexters that would try to troll me, and they would want me to admit what coins I'm going after because they thought that all they had to do was bid me up on Heritage. I would be the guy that's going for that particular item, and I would keep bidding up with them, paying an enormous price for a lot of these items. I don't think like a collector, guys. I go into these markets, and I think like a hardcore investor. And that's what gives me the edge in these markets. This is why when we talk about opportunity cost, when we talk about the current macroeconomic environment that we find ourselves in, all that has to be taken into account. It's just like if you know somebody that invests in real estate. If you know somebody that invests in real estate, whether they buy and hold, whether they flip houses, if they're using leverage, i.e. debt, with interest rates the way they are right now, it's not worth it in certain instances. So certain properties that may have been worth investing in back when rates were only 3 or 4% are getting passed over, even if they're on the market at all, now that rates are 6, 7%. When we talk about mortgage amortization schedules, you need to understand these basics. That's why I do this channel for you guys. It's supposed to get you to think in other ways. Even if you only watch some of the videos that I put out, if you understand this concept, the concept of opportunity cost, the concept that your collecting category does not exist in a vacuum, as much as you want it to believe, as much as you want to believe, Sean, you don't understand, I could pay whatever I want for Pokemon today, and 30 years out in the future, there's going to be some kid that loves Pokemon. He is going to pay a premium for that particular item. And what is it that I tell you guys? Number one, you don't know that. And number two, even if that happens, are you really going to beat out an S&P 500 index fund? Are you really going to beat out holding a lot of these long-term mutual funds and other investments for 20 to 30 years just to say, hey, back in 2022 or 2023, I bought a booster box of Pokemon cards for $220 and I sold it now in 2034 for $380. Don't get me wrong. You may have done well, but I don't know what the S&P 500 index did over that time. In most cases, you probably didn't do as well as that. So this is why I teach this, guys. You must understand and think like an investor. Now let's go back to that $10,000 comic book, because I'm sure that you want to know the answer. Here's honestly what I would say. You got to look at the macroeconomic environment as well as the market for which that comic book is selling for. Because here's why. If the Fed decides to continuously raise rates and we get up, and this is insane to me, but if we ever get there, where a money market account is paying 7 to 8%, I got news for you. You're going to see a lot of collectibles, even blue chip collectibles are going to drop a helen. Because now there's going to be people that go, you know, what did I pay for this comic book that I've been holding for the last 20 years? Am I going to make money on it if I sell into the market? And there are people out there that did very well. They invested in the comic books back in 2004, 2005, when we didn't have the full force of the Marvel Cinematic Universe. So if you look at the prices of certain CGC graded comic books back in 2004, 2005, they're selling for a small fraction of what they're selling now in the year 2022. Well, if you bought some of those books and you're still making a ton of money selling them, you can get 6, 7, 8% in a money market account now just by sitting on cash. I got news for you. There's going to be people that are like pulling the trigger, that are like, you know what? I'm done with this collection. I'm not getting any younger. If I can cash out, make some substantial money, and then just put it and sit it in a money market account and collect 7 or 8%, I'm thrilled for the time being. Now, there is one downfall here. If everybody runs towards the exit, obviously, supply goes up, demand drops. What happens to prices? Well, prices fall further. And this is something that we have to watch out for because it could potentially trigger a collectible market correction and or a crash. Now, make no mistake, as we go forward here, certain markets are going to correct. But there is a difference. I want to make this very clear. There's a difference between a correction and a crash. Well, what we saw in the graded video game space, I'm sorry, guys, that was pretty much a crash. What we saw in cryptocurrency, that was pretty much a crash. What we're seeing right now in comic books overall, with a 10 to 30% pullback, in certain cases, that's just a correction. And if you go back and you watch some of my earlier videos, what did I tell you guys? I predicted that. I said comic books need to start pulling back 10 to 20%. And we got it. We're finally almost there, with few exceptions. There are some books that are not pulling back. There's other books, they're mega keys, like your Detective Comics 27, your Action Comics 1. They're not pulling back anytime soon. But overall, that market needed a pullback. And I'm glad that it's happening. And I know that's going to hurt a lot of you out there that invested in it. But I hate to say this, if you would have watched this channel and you would have thought like an investor rather than a, I hate to say this, an emotionally driven schoolgirl, you wouldn't have gotten this predicament. So I honestly will tell you, learn from this. Understand that your collecting category, your investment, it does not exist in a vacuum.